Market news now. Asian markets were lower as fears of a global trade war continue to hound investors. In Japan, the Nikkei falling 0.8%, the Hang Seng in Hong Kong 0.4% weaker, and China's composite index slipping 0.2%. The S&P 500 and Dow Jones Industrial Average climbed on Friday as the Dow put to rest an 8-day losing streak with a boost from energy stocks. But losses in the technology space kept the Nasdaq in check. The Dow Jones Industrial Average rose 0.49%. The S&P 500 gained 0.18% and the Nasdaq Composite dropped 0.26%. Let's have a look at the rest of the markets now. Gary Boyson from Rand Swiss joins me now from our Johannesburg Stock Exchange studios. Good afternoon, Gary. Turkey's lira are doing very well after the election. Another emerging market currencies not faring so well, some even hitting 9-month lows. What's going on?
It seems the emerging market sell-off is continuing across the globe, and I think this is very much based on the the increasing interest rates that we're seeing in developing world economies, as well as the the removal of those kind of very accommodative monetary policy stimulus programs. We initially did see that the Turkish lira advance after the victory of Erdogan there. It has since reversed, so I think those emerging market fears coming back to the table, and everyone looking at it and thinking, perhaps a little bit more long term. And we've seen the Turkish lira now fall around 3% to the dollar after that initial spike. So, tracking more in line with its global peers.
And how much of these pains facing South Africa's economy and markets can then be blamed on external factors such as this looming China-US trade war, and to a certain extent the EU-US trade war as well?
Certainly, I think up until this point, markets have largely been ignoring the trade war and the potential fallout. Most economists pointing out that this might not have an absolute impact on the level of global trade, but far more on the allocation of how trade flows move across the globe. So, for example, if tariff barriers are increased dramatically between the US and China, China will still manufacture the goods. They might be exported to a third country and then move into the US from there. So, really, the concerns around the pattern of trade flows rather than the overall level of trading volume. That's starting to now become a concern, and with that becoming a concern, we're starting to see markets fall. So if the overall volume of trade across the globe falls, that would be negative for GDP, negative for company earnings, and we're starting to see that feeding into the equity markets. But up until this point, markets have been discounting it to an extent, but as I think the political noise and the rhetoric and the I suppose the real measures that both sides are taking are starting to bite, investors starting to become nervous.
Something else that's also going to affect us in South Africa that has to do with the global stage is we saw a price jump in oil on Friday after that OPEC meeting. How is this going to affect us, and what other scenarios are likely when it comes to the oil price here?
So again, we are very reliant on international oil prices being a net oil importer. But if you look at it, the oil landscape at the moment, we needed that output increase from the OPEC nations. So we've got both Brazil and China, at least India and China, both making public announcements around oil at $75 a barrel, saying that this price is very high and that the demand from their economies is still very strong. Yet at the same time, on the supply side of the equation, we've seen a lot of barrels being taken out of the market by the likes of Venezuela, Libya, Nigeria to an extent, Angola as well. And really that deficit not being made up with both Russia and Saudi Arabia inputting those output freezes. So we were looking at saying anything, in the OPEC meeting that was, the announcement announcements that we got out on Friday from Vienna, we said anything kind of below 700,000 barrel a day increase in oil supply was going to see oil spike and prices start to rise. We got 600,000 barrels a day, but since then further news has broken that potentially the Saudi Arabia and Russia would be able to push that up to over 1 million barrels a day. Now that helping to ease at least the pressure on the headline Brent crude price slightly, and we're seeing oil market that's down a little bit today, and that I suppose a net positive for South Africa, certainly in the face of rising inflation. I mean, oil and input, not just via the petrol price into our personal transport, but obviously very, very important to the transport of all goods and services around South Africa. So really feeding into our inflation numbers, and seeing lower oil prices. I mean, we've seen estimates from some of the big international banks, of as low, oil sinking to as low as $55 a barrel. We've seen that out of the big oil executives, as well as kind of the longer term price forecast. That hopefully very, very supportive of a lower inflation environment in South Africa.
Let's look at some stock prices as we wrap up. Firstly, Curro Schools, again in the news for racism. Has their share price been affected anyway by these new allegations?
Yeah, so I saw the Gauteng MEC for Education coming out and confirming that there was an investigation into Curro. So far, nothing out on Sense, so the Stock Exchange News Service, which technically should be the place that all price-sensitive news is released. At this stage, we don't kind of understand the actual earnings impact for the company. So stock price not under a huge amount of pressure today. Curro has been in a downtrend for most of 2018, and this looks more like a valuation issue than anything else. Curro always trading at an enormous premium to the sector, given future growth prospects, and also a stock that's traded on the back of this emerging markets, developed market discussion. And when you do get a bit of risk-off trade like we have seen this year from emerging markets, I mean we're hitting 9 months low on general broader emerging market indices. You see a company like Curro, which is very, very South Africa centric, very focused on the emerging market compared to some of the other counters on our bourse, taking a little bit of punishment. So nothing specifically around these claims, nothing out in Sense at the moment, but a stock that has been under pressure for most of 2018, and perhaps a good argument to be made that rightly so.
Directors of Dis-Chem alleged to be hedging exposure to their own shares. Some commentators saying that this is worrying. Should this worry any shareholders of Dis-Chem?
Again, you look at Dis-Chem and the types of structures that people are discussing. It's generally called a collar structure. It's options where you both buy put and calls at different at strike prices. Essentially, what the directors are doing is they're locking in the exposure. They're protecting them from downside by selling away some of the upside in the stock. Now, this isn't illegal or anything like that, but certainly I think if you're a shareholder in the company, you've got to question why management is doing this. They've given reasons that they want to diversify their own personal portfolios, which I think is a valid valid to a certain extent, but at the same time, it's something that's always, I suppose, plagued the capitalist system is the principal agent problem. You want to make sure that the managers are as a shareholder, I want to make sure that the managers of the company are very much linked to the fates of the company, and that's why you issue these share incentive schemes. If those directors are going to hedge away the risk, it sort of defeats the purpose of them having that sort of incentive scheme in place in the first place. And you've got to ask whether when you've got insiders trying to protect themselves from downside risk by selling away upside risk, is this the best commentary around the company? Dis-Chem is, I think, it's a quality company, but it's always been fairly expensive, and perhaps management signaling to the market that the stock price is a little bit high at the moment.
Gary Boyson from Rand Swiss, thanks so much for your time. It's time for a short break. We'll have more business news for you after that. Do stay with us.